and it go off. Yeah, hit the ground and it go off. Yeah, run it. Ooh, I really feel it's my time, think it's my year. Yeah.
What is up, everybody? Good morning. Welcome to the morning show here on Stock Market TV. Spencer Israel. I've got JC Parets. I've got Steve Strazza, and I've got you. We got a big day and a big week in markets. Let's see what's on our mind today. We're talking oil. Obviously, we got to talk about oil in the wake of those OPEC plus cuts from over the weekend. Today is also the kickoff day of Apple's WWDC Worldwide Developer Conference. We're going to talk about Apple stock today, see how that chart's shaping up. Let's see who are our guests. Andrew Thrasher is going to join the show at 9:10 from Thrasher Analytics. We got Kimmy Sokoloff after that, and Sean McLaughlin, Chief Option Strategist at All Star Options. So you know what to do. Hit that thumbs up. Wake your neighbors. It's time for the morning show. Yo. What's up,
everybody?
Happy Monday.
How's everyone's week? How's everyone's weekend?
Fantastic.
Miami Heat tied it up, going back home, looking good. That zone defense, they don't know what to do. They don't know what to do with that zone.
When they're shooting, it's going to be hard.
Strus, just you look at the difference, just Strus and Duncan Robinson, just look at the difference between game 1 and game 2. That's the difference in the game, right? Bam had a little bit fewer points. Jimmy had a few more points, so that's a wash. It was really coming off the bench. And by the way, Caleb Martin hasn't even started going off yet this series. So, look out. Miami going back to Denver up 3-1. You heard it here first.
Okay. All right. State of the market. Should we get into it?
Let's do it.
All right. Last I checked, this wasn't totally a Miami Heat show. We do talk stock sometimes.
It is this week, baby.
All right. So we're going to talk about the state of the markets. I have a question. I'm going to start with a question, and then I'm going to get into what I'm looking at in the market. Throw up slide 9 there, Fonz, on the Apple, pushing up against new all-time highs. I'll let you guys fact check me. You guys, somebody do the homework while I look at some other charts. But my understanding is that the EarPod business is so lucrative that just the EarPod business alone is the size of Netflix? Do I have that right?
Probably at least that big. I'm going to pull up the numbers right now.
At least that big.
Yeah.
When I heard that this weekend, I was like, are you kidding me?
Bro, $12 billion.
In what, revenues?
Yeah.
And that's what Netflix does, I guess?
That's not as much as Netflix, no.
Well, anyway, that's what I heard this weekend. I'll let you guys fact check me, but I was just kind of floored. I shouldn't be surprised at all because this is a $3 trillion company. So what's a Netflix here and a Netflix there, right?
Oh, that's a quarter. I think that's a quarter. Yeah. Wow.
Amazing. Okay, let's go to the NASDAQ. Slide 2, new 52-week highs. Once again, we continue to see new 52-week highs. Guys, listen, I've gone back. I've studied every bull market of all time, going back to the birth of Christ. We've all seen those charts that go back, like interest rates going back to like 6,000 BC. We've seen them all. I've studied them all. You know what you see in bull markets? You see a lot of new 52-week highs. You know what you don't see in bear markets? You don't see a lot of new 52-week highs, right? So we just keep seeing these. And then, obviously there's that ugly rumor that it's only 5 stocks. Anybody who took math in 3rd grade knows that that's not the case. Go to the next chart so you can see the All Country World Index. All country, right? So not this country, not the 5 stocks index, the All Country World Index, which, by the way, includes a lot of the United States. I think it's like 65, 70% over there. New 52-week highs. So it's not just the United States. Obviously, as we've talked about here, you got Germany, Denmark, France, United Kingdom, Japan's making 33-year highs. We're seeing strength globally. It's not like, the United States is like the least of it, right? A lot of these other ones are making new all-time highs. How about the volatility index here, slide 4? The volatility index making new 3-year lows. We're going to have Andrew Thrasher here today at 9 o'clock, which I'm looking forward to. Andrew Thrasher and I just had lunch in Arizona together. couple of weeks back. So nice to see him again. Thrasher has won multiple Dow awards. His first Dow award was about volatility. So we're going to talk about that and what he's thinking here. The question, that, I'm not like Mr. Volatility expert per se. I don't know if anybody actually is. But the question that I will pose to Thrasher is, does this mean that volatility should continue to decline? Is this just characteristics of bull market? That's how I see it. Or is the fact that volatility is so low, does that mean that it's due for a mean reversion and we should get a lift in volatility and sort of get his idea on how he thinks through that question, right? Because that's really where my head is at. Moving on to the next slide, look at the Russell 2000 Monster Day on Friday. When you look at the ratio between small caps and the NASDAQ 100, that ratio had its highest rate of change in over 2 years on Friday. Monster Day as potentially that rotation that we've been looking for over the last month or the last few weeks or so. We were in the Russell 2000. We were buying small caps a couple of weeks ago. We were also buying industrials, which is the next chart. Industrials historically have the highest correlation with the S&P 500 of all the S&P sectors, right? We know that. So because of math, we can argue that industrials are the most important sector, right? You can argue technology is the most important because it's the biggest. You can argue financials are the most important because it's financials. Hard to have bull markets around here without financials participating. If math means anything to you, the most important sector is actually industrials. And when you look at industrials, does this look like a downtrend to you? Right? What does this look like? I mean, looks like an uptrend, looks like a healthy consolidation over the last couple of years, looking to resolve higher, right? Somebody check my math, only a few percentage points away from a new all-time high, not far at all. And then we're long Caterpillar, very much so, actually. We've got the November 240 calls. Friday was a great day. Obviously, stock was up 8-9%. It's not so much that I like the fundamentals of Caterpillar or there's like this secret, trading system that I have that's going to tell me to buy Caterpillar. None of that. It's really just a way to express a bullish thesis in industrials, sort of betting on that rotation in the same way that we're betting on the rotation into small caps. We might be starting to get that based on what we saw on Friday. And then finally, guys, is the Dow Jones Industrial Average and the NASDAQ 100 here. People are talking about how the Dow is sort of underperforming, and it's really the NASDAQ that's leading the way. The Dow Jones Industrial Average is much, much closer to new all-time highs than the NASDAQ 100. Granted, the NASDAQ 100 had a much steeper decline. It's obviously had a much bigger bounce off the lows. But the Dow Jones Industrial Average, the world's most important index, is 7% from new all-time highs. I don't think that's a bad thing. I think we probably see it soon. This summer, maybe in the fall. I think we see it soon. And that's the state of the markets. How did I do?
Good stuff. See those small caps last week? Nothing about small caps, huh?
What are you talking about? I literally said small caps.
Oh, you did? I wasn't listening then. All right, good. That stood out to me too.
Well, if you don't pay attention during the state of the markets, how are you going to be aware of the state of the markets? First, we did the state of the NBA, right? Everybody knows, right? Miami's got the Mo. Miami's got that Momo. And then we went over the state of the markets. Doesn't seem like a bear market to me, Mr. Strazza. Does it to you?
Wait.
No, I also think it's great that we got Thrasher on today with the VIX making these new lows. Could there be someone better to talk to about this?
I don't think so. It's nice having smart friends. Before we continue, Spencer, come on down. Throw up that chart of oil. Why don't we talk about what the heck's been going on over the weekend? You guys are on Slack, very excited about whatever it is that happened. I guess.
Wait.
What are they doing? They're shutting down drillers or something. What's going on?
Can you hear me or no?
I hear you now, loud and clear.
You do? Okay, I wasn't sure because my restream just kind of seized up on me. So am I on? I just want to make sure that I'm on with you guys.
Oh yeah, we can hear you. Can't see you, which is okay in my book.
Okay, yeah, that's fine. That's
you.
fine. Okay, yeah, I'm back now. Sorry, I had my computer had a seizure. Okay, so yeah, OPEC had a meeting over the weekend. OPEC Plus, right? OPEC Plus is OPEC Plus. They're Russia, whatever. And Saudi Arabia.
Hold on. I don't know anything about this stuff, so don't talk to me. Don't pretend that I know. So explain to me, OPEC Plus means with Russia? What does that mean?
Yeah, right. Isn't that correct? I don't even know if I remember myself, but
I guess it doesn't really matter. Okay, so they
Doesn't really matter.
decided that. What are they going to do?
Here's the thing: Saudi Arabia came out. So remember a few months ago, I think was it April, they had announced cuts, right? They're going to production cuts, and Saudi Arabia came out over the weekend and said we're actually going to voluntarily have more oil cuts. So we're going to reduce our output by 1 million barrels of crude oil a day starting in July. So that's 1 million barrels, a reduction of 1 million barrels per day on top of the 500,000 barrel per day reduction announced in April. And this brings Saudi Arabia to their lowest oil output in 2 years. Okay, so they've not been producing this few amount of oil in 2 years now. The next meeting is going to be in November, so that's sort of the next thing to know.
So less supply, in theory, all things being equal, means price go up. No.
Yeah. Yes. Yes, and that's what you saw in the futures market over the weekend.
Natural gas up over 5%. Also, by the way.
You're gonna need a little bit more than this, though. No.
For crude oil to get going, I mean, it's back into the mid 70s. I mean, that's what it needed to hold, right? It was sloppy. But back in the mid 70s, that's what it needed to do. It's doing it. No, like small caps, like industrials, right? The buyers are stepping in when they need to step in, OPEC plus or minus or otherwise, right? The buyers are stepping in when they need to in all of these areas that they need. So the question is now, do they step into financials, right? Because we got financials, you got regional banks going out at the highest levels in about 6 weeks. That's not nothing.
So 76 is really the level for me. Those 2018 highs.
Yeah, that's right.
A couple dollars away right now.
Yeah. I'm impressed. I don't hate it, right? Uncle Warren stepping in there, buying Chevron, buying more and more Occidental Petroleum.
Surprising.
I mean, if oil completely falls apart, Uncle Warren's not going to be making money on that trade. And the way I learned it was Uncle Warren has 2 rules of investing. Rule number 1 is don't lose money. And rule number 2, don't forget rule number 1. And if crude oil is not going to catch a bid here, then Uncle Warren's not following his own rules. Now, is he?
Listen, he's been wrong before, right? Let's see it. He's been buying the stock at the same level for 15 months now.
That's called conviction, Strazza. Conviction.
It's one thing to not lose money, but it's another thing to actually make money, right?
That's right. That's right. But considering crude oil has done what it's done, and we've had this massive correction in crude, and Uncle Warren hasn't lost any money, that's a win. I'd argue that's a win. No?
Yeah. I had a question actually. Can we go back to the QQQs for a second?
We can.
I saw this thing from I guess from Carl Quintanilla /BTIG on Twitter, and I guess last week was the largest weekly inflows into the Qs this year.
Yeah.
Flows when flows peak, when inflows or outflows peak, it's typically seen as a contrarian indicator.
I've never seen any evidence. I've never seen any evidence of that at all.
Well, just anecdotally speaking, the flows into Kathy's funds, IRKK, peaked February at the top, right? February 21 or January 20, whenever that was, right? And so it can happen. So I guess my question is, does that interest you or not really?
It's just it's normal because sentiment chases price. So the fact that the Nasdaq keeps making new 52-week highs and you're getting people chasing that, like that's perfectly normal. Does it mean that it's going to continue higher? Does it mean that's the top? Like it doesn't mean either of those things. It just means people are chasing price, which is perfectly normal. By the way, fun fact about the Nasdaq: most amount of new 52-week highs since February. So 4-month highs in the amount of new 52-week highs. Fun fact.
Andrew brought along some breadth charts, which I am literally staring at right now. And
I haven't looked at them. I will look at them when the time comes, and I will ask my questions accordingly.
I had one more thing I wanted to add.
What, the Baltic Dry Index? How about this news about the Baltic Dry Index? What does this even mean?
What does anybody still look at that? I thought we retired that one like 15 years ago.
I'm actually looking at the chart right now, and it's incredible how far this thing has fallen in such a short period of time.
I don't think that's a thing anymore. I think it's like, you know how like they're talking about the debt ceiling because they ran out of ways to scare people, so they're just recycling like old things. Like
Hey.
I think like the Baltic Dry Index is that. They're like they just ran out of like, right, you know?
Don't say debt ceiling anymore. It's over.
I'm not allowed to say it.
No.
They'll bring that back in a couple of years, is my understanding.
8 years, at least
8
No.
years. We don't have to talk about this shit for another 8 years.
I don't know. I mean, we had what, like 12 years since the last time. So
All right. That's
No,
good.
not. Didn't we just learn from Jeff Hirsch that this is when the debt ceiling problems begin in the market?
I don't have to say it.
Okay.
Why?
that's
Because
fair.
It's over. People will have forgotten now. They're not going to blame it on the debt ceiling.
right. They'll blame
Oh.
something else. Right.
Okay, fair enough.
We might.
Let's talk some Apple. Let's talk
Let's do
Apple. Okay. This is probably going to be the story of the day, maybe of the week.
Macy's going to the city. He's going to wait in that long line of people, and he's going to get this new VR headset.
First of all, stop spreading fake news. JC doesn't wait in lines, so that's not a thing that I'm going to do ever. Like I'm not going to do it. Like this one time we were in Italy. It was like a Saturday night. We were in Florence, and we're going to this club. Morgan and me and another couple. It was the longest line. And granted, I grew up in Miami and I lived in New York for a long time, so I know lines for clubs. This was by far and away the longest line. There's zero chance that I'm waiting in this line. Walked right up to the front of the line, started spitting Spanish. I'm like, oh yeah, Juan Carlos. And they're like, yeah. I'm like, come on down. Walked right into the club Flow in Florence. Highly recommend. Good times, great times actually. So needless to say, the story is I'm not gonna wait in any lines. If I can't order it online, I'm not getting one.
All right. Well, I'm sure you can order it online. So what we really want to know is, are you getting one?
Of course, I'm getting one.
So we had this conversation. No, the reason I'm asking, we had this conversation. I wish that you were here last week.
Wait, getting one what? Can you explain what the one is, or so the people know?
Yeah. And explain what was it, like 2020? Maybe you got that was a big deal when Meta came out with, I think, their first Oculus. Yeah. You like to try new products when they come out.
That was a cheap one though. It was only a few $100. This was expensive.
Right, and I think their new model's even cheaper. They announced it last week. That's why we were talking about it. Now Apple's doing theirs today. So give us the context.
Well, yeah, I mean, again, it's all rumors and speculation, but we know that when it comes to Apple, these rumors are usually pretty accurate. So their predictions are that, Apple's going to announce, a shit ton of stuff. They're going to update all their operating systems and this and that, new versions of whatever. But the big news, the creme de la creme for this week from Apple is this Reality Pro AR VR headset. Basically like ski goggles is how it's been described. I'm seeing it described. Ski goggles with a screen and like a battery pack attached and like super high res screens and cameras attached. So I don't know, somehow. And it's gonna be the like Ready Player One.
Where are we in the cycle when we all decide to strap iPhones on our faces? What part of the cycle is that?
I know $3,000 is what they're saying this thing is going to cost.
But listen, here's the way I look at it. I look at it as an investment, right? And it doesn't mean that I'm like Mr. Video Game guy. I don't even know if this is for video games. I'm totally even making that up. That's how little I know about these things, which is what I'm doing. I'm investing in myself. You drop a couple of grand or $3,000, whatever it is. Like, yeah, that sucks. I probably spent, money in worse ways, but if this is new technology, I want to participate in it. I don't want to like wonder like what's going on in this world. Like, and that those experiences help me make better investing decisions. And I've learned that over the years from, some of our smart friends, play with the toys. You got to play with the toys. And this is me. And my wife will be like, did you really need to spend that much money on this stupid thing? Right? I'll get that. And then I'll be like, honey, come on. Don't I have a pretty good track record of making decent decisions? Come on. Let me play with the stupid toy. You could play with it too,
Listen, I agree. I think that's a great strategy. It's also fun too. And even if that wasn't the case or your goal, like Apple's probably going to make this thing far better than anybody else. Right. So like if you're going to get something that's, state-of-the-art technology, it's brand new, you probably do want to get the best one. I would imagine there's a reason why that price tag is, 10 times whatever Meta's is. They've proven that they can, consistently make the best products.
Hold on. So we find out today what the sitch is with this thing? Is it today?
I think so. Yeah.
All right.
So it's like a 4-day conference, right? And they're so like the thinking is that yes, they're going to announce the headset today, but we don't really know, right?
I'm sure I'll see it on the Twitter.
Yeah, you'll see it on the Twitter. In any case, I do want to also mention that Apple is at the top of our Hall of Famers, which I believe is on the next slide or the prior slide. Just top of that scan because it's such a beast.
Yeah, so our Hall of Famers consist of the largest 150 companies in America, and it's sorted by, what are we sorting here? Proximity to new 52-week highs, and Apple's at the top, which by definition means it's closest to new 52-week highs, right? So, I mean, listen, Maria was asking me last week on the show. I was on Maria Bartiromo's show Thursday morning, and she's like, JC, does it worry you that, it's a handful of stocks? Like, I'm like, I took it easy on her, right? I could have really laid into her, be like, Maria, it's not 5 stocks, but I was respectful, and I was like, listen, there's nothing wrong with your best players scoring a lot of your points. There's nothing wrong with that. Like, took a page out of Todd Sohn, page out of John Roque, some of my favorite technical analysts out there, always using sports analogies. This is a good one, right? There's nothing wrong with your best players scoring all your, a lot of your points, not all your points, but leading your team in scoring. What's wrong with that? So I don't think there's a problem at all. And if you really want to like think philosophically, like Apple's like a lot of companies, right? Amazon is a lot of companies. Like it's one publicly traded company, but what is it? Like Amazon Web Services, it like on its own would be like an S&P 100 company or something like that, right? I mean, it's a lot. How many companies does Google have? Like a zillion, right? Meta has a zillion companies. Right?
I'm looking at Apple's segment revenue right now because I'm still looking into this wearables and AirPods thing. iPhones, 200 billion in revenues. Macs, 33 billion. iPads, 30 billion. Wearables, 40 billion a year. So yeah, that's like 4 large cap businesses right there.
Just on the stupid AirPods, I've already lost 2 pairs, so I stopped buying them. I use my old school ones. I'm done.
I think I bought 3 this year. It's crazy. They're
what a business, man. What a bit. They're literally profiting on us being idiots.
Yep.
Like what a great business model that is.
I bought so many that the last time I was like, forget about it. I'm going to get the old generation. And now I got the old generation. I'm like, God damn it. I should have got the new generation.
That's where they know how to get you. They know how to get you. All right. What do we got? We got any earnings? Is this still earnings season or are we done?
No, it is, dude. Earnings season never ends. It is still earnings season. We have nothing today to speak of. There will be more later in the week that are worth talking about. Wednesday, Thursday, Friday, but nothing today. I don't think anything interesting.
Palo Alto.
Tomorrow
We're not talking
either.
about Palo Alto.
Palo Alto. Yeah, we should hit that. That is actually at the top of a lot of pre-market scanners this morning. Do you know why? There was an announcement over the weekend, or was it Friday? Yeah, it was Friday. Palo Alto is replacing Dish Network in the S&P 500 index. So a lot of automatic buying happening in Palo Alto here as the index providers.
Go to slide 1. We got the chart in there.
Yeah, the index providers must account for this change. So some buying of Palo Alto, some selling of Dish as it relates to the S&P 500, and that is why its stock is up. What is it, 5% this morning? Yep.
New all-time highs, Spencer. I don't know how they do it in New Jersey, but where I grew up, new all-time highs are not a characteristic of a downtrend. I don't know.
There aren't many stocks in their group that look as good as Palo Alto, right?
I mean, look at this thing. I mean, new all-time highs. You're going to argue with that? I mean, I'm told it's only 5 stocks going up, but I keep counting more stocks going up. It's a hell of a lot more than 5. There might be only 5 stocks going down.
Fortinet is another cybersecurity stock that looks good and trading new highs, but outside of that, it's really just Palo Alto.
What a beast, man. What a beast. This entire space. I mean, look at that smiley face. Here we're looking at $66 billion software stock. The fact that these software names, I mean, these software names of all those growth stocks that got crushed over the last couple of years, software was front and center, and Palo Alto making new all-time highs, as one of those just examples of software that, went parabolic, then got cut in half, and now it's making new all-time highs again. So if you're wondering, if you have a stock in your portfolio or you're looking to put on a position and the stock looks like this, By the way, there's a lot of stocks that look like this, and you're wondering how it's going to resolve. Look at how the other ones that look exactly like that are resolving. And more of them are resolving higher. You're not getting these like massive destructive breakdowns like you were seeing a couple of years ago. You keep getting upside surprises, right? Surprises, lasers, right?
The earnings reactions in general, particularly in the tech sector, have been very positive.
Yeah, 100%.
This quarter.
100%.
All right, yeah, guys, I'm dying here. I'm getting more RAM today. My computer is giving me all sorts of fits. I'm
Great
assuming you can hear me.
We're here loud and clear. You're good.
Oh my goodness gracious! All right, yeah, that's great that you can hear me. I can hear you, but my audio is fine. My video is killing me here. Okay, so where are we on the deck? I can't even bring it up. I'm
Bring in
dying
Thrasher.
here. He's not even.
You ready
here
yet?
No. Thrasher is joining us at around 9:10, right, Strazza?
Yep.
That was the plan?
He goes to the gym in the morning. Yeah. So energy stocks catching a nice bid this morning on this OPEC plus.
Oh, wait. Can I say something first with regards to the 7 stocks thing?
Yes.
I saw a lot of that this weekend in places that I don't normally see that on the internet, mostly on Reddit. In
See what specifically?
In non-finance corners of the internet, people noting how a large percentage of the S&P's gains this year have come from 7 stocks, right? Or without 7 stocks, the market would be down. Or it's these 7 stocks, right? I'm seeing it like cross over into more mainstream areas of the internet is what I'm saying.
That makes sense because, and even Maria, who's been doing this for 3-4 decades, right, succumbed to the sexy headline that if you reverse engineer the weighting of the S&P 500 and you take just the gains of those stocks and you take the gains of the other stocks, you can do the reverse math that those stocks are what are driving the gains for the S&P 500 this year. So therefore, it must only be 7 stocks that are going up in value, right? It's a lot of if-then statements that don't make any sense at all, right? First of all, reverse engineering the performance of the S&P 500 and the performance of those components does nothing. Anchoring to the beginning of the year, again, also does nothing at all. If you want to anchor to anything, you should anchor to last June. The only reason to anchor to the beginning of the year is because that's when things flipped from growth underperforming to growth outperforming. It just so happened to get going in the first week of this year. So if you're going to anchor to the beginning of the year for any reason at all, it should really be to show the sector rotation. So not only does it not matter that if you reverse engineer the math for the S&P 500, like that's stupid, right? Like these are people who hear something, like hear this anecdote and just repeat what they say without actually thinking through what that means. They think they sound smart, but they look stupid, right? And for those of us who understand the way the market actually works, it's very clear that those anecdotes don't mean anything, but it just reiterates that the average investor doesn't actually think through what that means. And then you make a great point, Spencer, how these non-finance publications are written by journalists who know even less to their audience that knows even less, right? So it's just like this silly game of telephone from the misinformed to the even less informed. And that is just a great example of the way things work and why most investors are just very confused with what's actually going on. You've got a lot of these indexes making new 52-week highs, new all-time highs in some cases, and your average investor is wondering when the bear market's going to come to an end, right? Like it's good that you brought that up because it's just a good example of the way the world works, and I'm okay with it. Like I'm okay with most people being misinformed. Like that's not my problem.
Growth versus value working on 7th straight up week. I mean, you talked about it. This trend began the first week of the year and has not cooled off at all. In fact, this would be, the biggest win streak. It already is since first quarter of 2020.
By the way, and can we talk about home builders, right? Home construction. Somebody in the chat just brought it up.
With a weekly candle in these things.
I mean, dude, right? So Ken just brought it up. I mean, these things are absolutely ripping. I mean, any idiot who thinks only 5 stocks are going up, like how, like seriously, and not like to pick on people, but like you really need to have that head up your ass syndrome to really think it's only 5 stocks going up. I mean, these home construction stocks. I mean, man, I mean, just since think about it, since October when interest rates peaked, by the way, probably not a coincidence. As an index, these things are up over 50-60%. Just in a few months. This is home construction. You know, people are talking about a recession, you know, this crisis, right? Home construction stocks absolutely ripping. Does not remind me of any of those things.
To be clear, I think what you're trying to say is these are not tech stocks, right?
No.
These are home builders. Very different from tech stocks.
And how many of those 5 tech stocks that are the only ones going up trade on the Japanese Nikkei that are making new 33-year highs? How many does Google trade in the Nikkei? I didn't get the memo.
Chart 1. Throw this up. I mean, if you're looking for a home builder stock, a vehicle to express a bullish thesis on this very, very strong industry group, I mean, for me, look no further than D.R. Horton. I believe they're the largest in the space, the industry leader.
Is DHI the largest market cap? I didn't realize that.
Yeah.
I would have guessed Lennar.
Lennar's close second. Yeah. Mm-hmm.
It is a close second. Yeah. So DR Horton is 38 billion. Lennar is 32 billion. Pulte Homes is 15 billion for those keeping score at home. And what's the other big one? Lennar, Pulte, DHI, and there's one more.
NVR.
NVR is a little one.
Builders First Source. They're all
NVR is 18.
PHM.
KB.
18 billion.
KB.
KB's tiny.
Really?
KBH. No, KB Homes. He's right. And it's tiny. It's 4 billion. Yeah. So DHI, largest one. That's interesting. I didn't realize that.
Well, anyway, new highs.
Oh,
not
tall.
just
Tall
absolute
brothers.
terms, but also breaking out on a relative basis, showing that leadership. This suggests more leadership to come, further outperformance in the future. And you can define your risk very clean, you know, here at these former highs. So
Toll Brothers tiny also. I didn't realize Toll Brothers are so little. It's only 7 billion.
Because they're by nature, these businesses rely a lot on geography. So there's a lot of regional activity going on here. So there's only so many big ones that operate around the country.
All right, real estate investor over here.
It's regional business. Think about it.
I guess. I just learned that today.
Yeah. So Lennar looks good too, though, right? Lennar looks very similar. TPH, that's another one.
Yeah. So Lennar and DHI, largest two. They're above 30 billion. They look like the index. They look like ITB. You know, they look better, showing relative strength compared to the rest of the group. Again, large component of the consumer discretionary space. You know, I'm told the consumer's dead. I'm told the consumer can't afford anything. Right? Well, I guess not.
Yeah, it depends on where you look, right? Because some of these retailers, like we've been talking about, don't look great and give you the sense nobody's buying anything. But it's really like, you know, it's company specific. By that, I mean, like there are winners and losers in most groups. You know, we talked about the difference between Uber and Lyft a few weeks back. Like we can go to a lot of these different retail groups or discretionary stocks and find charts that look good. Auto parts, Advanced Auto, terrible. AutoZone and O'Reilly, great. So just mixed stuff in a lot of places.
Which by the way, as bull markets progress,
You're losing that correlation, of course. Yeah.
the correlations, you know, bear markets, volatility spikes, what happens? Correlation spike to 1.
Yeah.
Then as the bull market progresses, you start getting that dispersion, you start getting that bifurcation, even within industry groups, right? And to your point, Strazza, that's what we're seeing. So just another classic characteristic of healthy environments, which we continue to see more of.
Yep.
Anything, before we bring in Thrasher, anything out there that suggests extreme caution in the equities market is warranted this summer?
Me?
Yeah, you.
In the equities market or in any market?
Equities market. Oh, well, good point, Spencer.
Thank you.
You could be getting data from the bond market that suggests, caution is warranted in the stock market. But I'm specifically referring to a stock portfolio, which I know you're leaning long. I am as well. Very much so. Have been, right? And looking to add to long positions, by the way. What are you seeing out there, if anything, that would suggest that a caution is more warranted than pressing long bets?
Got to see that rotation that I've been waiting for into the value. And
did it start on Friday?
I think it did. I really do. And I want to talk to Thrasher about that too in a few minutes. But you saw the small caps, you saw the speculative growth really catch a bid and surge into the end of the week. So that's a positive, but we need to see it continue.
Speculative growth or speculative value, you mean?
No, speculative growth, because that's an area that I need to see expansion and participation.
What do you consider speculative growth?
ARC. I'm talking about the move in ARC on Friday, right? Move in small caps, the move in ARC, more speculative areas, both value and growth. We're getting bid up Friday.
Did you see JB and Batnick interviewing Kathy Wood?
On my list.
Down in Florida?
I was 5 minutes in. I didn't get to finish it. Did you?
I saw the beginning of it. It was hilarious because they're sitting there right now, and it's Batnick, Kathy Wood, and JB, right? Josh Brown. And the first 5 minutes of the episode is just Josh schooling Kathy on the history of St. Petersburg, Florida. Like he must have been on the Wikipedia page that morning on the way to the interview. He's just drilling her with all these fun facts, and her head's exploding because she lives there, right? And they run the, who knew?
He's too funny. So breaking news. Since you brought that up, Michael Batnick will be on the show 9:00 tomorrow, so we'll be able to ask him about it personally.
Really?
Batnick's booked for tomorrow. We have such a great list of guests this week. Thrasher, Batnick. We got Roke Friday or Thursday. Lundgren Friday.
I'm out of town on Wednesday and Thursday.
Well,
maybe I'll chime in. I'll call in. I got business meetings, Strazza. I'm taking care of business. You know?
You miss Roke. Yeah.
Well, our first guest is here right now, Andrew Thrasher from Thrasher Analytics. I'll bring him in. All right, here we go.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Thrasher.
What's going on? Good morning, fellas.
What's up, my man? How's your workout? You got a good lift in?
I literally got through the door about a minute, 20 seconds ago.
What are you benching these days?
Today we weren't benching. We did 75 GHGs, wall balls, front squats, weighted chin-ups.
What's a GHG?
Sounds
Google
like
it's an ab movement where you completely separate essentially your rib cage. Go Google it. You'll see it.
Sounds like I'll get taken to the hospital if I do that.
Have you guys been?
I'm putting up 225, 5 times. I'm doing all right.
Bench press or weight?
Bench press. No, I'm down to 215. I'm on the Proman program, Thrasher.
That's awesome. I haven't seen you guys in a couple of weeks. We were hanging out in New York and spent a little bit, so it's good to catch up.
Arizona, we had a nice little lunch in Arizona. Me and Thrasher had a mandate. Strategy.
Yeah.
I thought we were gonna have a mandate when you came to Key West. You didn't call me. Did you have a good time?
I was in Key West for 8 hours.
No, I know.
Thrasher doesn't have kids, Thrasher. He doesn't understand. It's different.
We did a bike tour around Key West. I definitely want to go back. It was a cool spot. I definitely want to go back to Key West.
Eat some good food, I hope.
We did. We had 2 different pieces of key lime pie. We went to a couple different bars. It was good time.
Key lime pie on a stick, dipped in chocolate. That's the move.
Delicious. Yeah.
Oh, yeah. All right, Thrasher, let's get right into it. So, folks, for those who don't know Andrew Thrasher, make sure to follow him on Twitter. Make sure to follow Thrasher Analytics as well. Andrew Thrasher, 2-time winner of the Charles Dow Award. And I'll tell you what, you won it a few years ago. You didn't have any kids, so you're not going to get much credit. You won this one with a kid. I feel like this one means more,
I appreciate that.
Yeah, I feel like this one, as someone with kids, I feel like I wouldn't. Strazza's like, Strazza doesn't understand. I feel like I respect this award much, much more.
Took a little longer to write this time with a at the time 1-year-old.
I can imagine. All right, let's get right into volatility. When I have volatility questions, it's good to have smart friends. When I have bond questions, I got those guys. When I got emerging market questions, I got those guys. When I got volatility questions, Thrasher's right at the top of the list, right? So, Fonz, throw up the VIX chart. I know how much Thrasher likes to do technical analysis on the volatility index.
To a degree. We don't get too crazy with the VIX.
For the record, acknowledging that the volatility index even exists is technical analysis, because are we or are we not observing the behavior of the market and market participants by looking at the volatility index, which is the options market in the S&P 500. We're analyzing the behavior of the market. So just acknowledging that it exists is technical analysis, in my opinion. And here we are with the VIX making new 3-year lows. So
crazy move last Thursday and Friday.
So my question is this, and it's just from the heart. Volatility tends to mean revert, and asset prices tend to trend, right, in direction, right? We know that. So when you see the volatility index breaking down to 3-year lows, are we entering a new regime of volatility where, historically, when you look back at bull markets, volatility tends to be lower, and in bear markets, volatility tends to be higher? So is it a new regime, or should we be thinking, volatility is really depressed, look for a mean reversion to the upside? How do you think through that question?
And before you answer, Andrew, throw up chart 50 for him, Alfonso, while he does.
Yeah, so I think there's a lot of emphasis getting put on what happened Thursday, Friday. Bloomberg had a really interesting article that kind of tied into this topic, looking at how everyone's been talking about 0 days to expiration options. That's been kind of the new favorite tool, and how they started using weekly options, specifically on Friday, as kind of a quasi zero DTE. And that's what we've seen. Friday has really been a big day for equities, because they're using weekly options on NVIDIA, Apple, Microsoft, all the stocks with weekly options that you don't have 0 DTEs on. So I think that's where we're seeing really big moves on Friday, or helping explain some of it, and helping explain what we saw on Friday in volatility that just completely collapsed back down to 15.
Spencer, hold on, Thrasher. Spencer, can you take the videos out? There you go.
There
Perfect.
you go. Yeah.
Yeah, so this chart's what I sent over. This is looking at the daily sentiment index. It's a measure of bullishness towards future contracts. We have this for all the futures markets. This one looks at the VIX. And what this is showing us is percent bullish towards this in this case, it's the VIX. And it was 9% on Friday. We don't see single digits very often. When we see single digits really on any futures contract, that's extremely low level bullishness. So I drew some pretty blue lines on here when we cross below 10. And you can see we typically don't see volatility decline a lot further lower when we get this few bulls in the VIX futures market. So the idea that we're starting a new regime, I think, is way too early to make that kind of call, just because we broke a low on last week. We saw the entire curve shift lower. The entire curve hit near lows, which is obvious. It's actually pretty rare as well. Normally we'll see kind of the front month contracts move, but like 6-12 month volatility doesn't get that low. Friday we saw the whole thing collapse.
So the DSI is basically, sorry, I know nothing about what the daily sentiment index is.
Yeah, sorry.
Like it's a measure of what speculators are doing in VIX futures, basically.
Yeah, so it's DSI. It's a daily composite put up by Trade Futures, and it's for all futures markets with soybeans, yen contracts, Swiss francs, S&P, Nasdaq. For everything that has a futures contract, there's a daily sentiment number, percent bullishness for each one. So it's just showing that the idea that there's kind of this notion that everyone's extremely bearish, there's no bulls left. When you look at, there's no bulls left in VIX. Everyone's turned bearish on volatility. And I think part of it's also just when we kind of look at the debt ceiling, you probably had a lot of people build up on hedges. Some of that probably got unwound. That probably helped contribute to it. But the sentiment towards volatility extremely low.
Yeah, we've been taking advantage of low volatility by buying call options as far out of the money as possible. We were in Caterpillar more recently over the last couple of weeks. Nice day on Friday, obviously.
Nice move for materials industrials, yeah.
Yep. And not that anything special about Caterpillar. It was literally just my vehicle to express a bullish thesis in industrials and getting that rotation, right?
Can you name one thing Caterpillar makes?
Don't they make like those big like digging things, like those
industrial
machines?
Machinery, yes.
And yeah, those giant machines, bro.
You could have said anything. I wouldn't have known if you were right or wrong.
I had to do the septic thing. They brought some Caterpillar stuff in here. Yeah, man, just big ass machines, man.
He doesn't know the names of them, but
I know.
So hold on. So Andy, so when we talk about how this is likely not a new regime for volatility, it sounds to me like you're leaning more towards a reversion. Higher in volatility, perhaps.
Yeah, I think short-term wise, I think the next, if you're saying is volatility going to go up to, it's going to see 10 or 20 first, I think it's probably going to see 20 first. I think we're going to see a move higher in volatility. We're not going to go back to COVID crash lows of 80 on the VIX, but I think volatility is extremely compressed right here. We've actually seen dispersion contract as well. I think you could see a move up in volatility in the short term.
And in that case, you're selling volatility, right? You're selling calls, you're selling puts, you're getting income, looking for volatility to come back down. And in that scenario, yeah.
Yeah, I mean, I kind of see how it moves. How do we see the curve? We see backwardation, kind of see how the whole volatility market moves. But I think we definitely see kind of the whole curve go up, specifically short-term volatility.
Andrew, talk to me about some of these breadth charts that you brought.
Hold on. Can we just? I just wanted one more. I promise. And if Strazza doesn't like it when I steal all
I've
the
never
questions
heard
from
you
the
so
guests.
interested in volatility.
Well, we're talking with Andrew Thrasher, so of course I'm going to ask him questions about volatility. Spencer, throw up slide 1 there, just so you could really see the regimes. You know, I'm curious, and we'll get into the breadth. I'm curious, what is it that you're seeing, and it might be the dispersion that you just discussed, but you know, when you look back at like the 2004 to 2007 period, when you look at the 2013 to 2017, 2018 period, you had volatility drop into single digits in those environments. And by the way, they were very good times to be shareholders of stocks, right? Those are good periods to be long stocks. What makes you think that we're not going to do that again?
I keep an open mind. We could. I kind of look at it as the data changes, and right now I think the thesis is that volatility has become compressed. There's no bulls left. We've seen a complete dropout in the whole curve. I think kind of those things set up for a move higher. Maybe the market proves it, and there's something you have to talk about. When the evidence says one thing and the market does something else, that's just as important as when the market confirms the thesis. So if we do see the market buck that trend and continue to see volatility collapse, that I think really will show the resilience of the bullishness in equities, that even they were able to fight against this kind of bullish thesis and volatility.
But that doesn't mean that you can't see 21st and then it breaks down.
Sure,
right?
I'll trade that.
And then if you see a 13 handle on the VIX, you think it's on its way to 10?
Don't care. I don't care about the actual level of volatility.
So you don't look at it as like a shelf where if we break the shelf at all?
Absolutely not.
Interesting.
And I think that, and when you study the volatility, the absolute level, and I did that in my 2017 paper, is no predictive value. One, the sample size is too small. People are like, well, look at it a couple of times, it's gone below 10. Well, your sample size is like 6 times.
Right, I was going to say.
So when your sample size gets that small, you're getting really into a dangerous spot.
Right. And what happens every time the VIX hits 80? What happens there?
Yeah, exactly.
All right, Strazza, sorry for stealing your thunder. Ask the man about his breath.
No, you're right. We have to talk as much volatility as we can when Andrew Thrasher's on.
No, I'm excited to talk about breadth because I think this is where you guys and we differ. So I'm curious to get your takes on these charts.
Yeah, so I like what you did here. Explain to everyone, and let's throw up the chart that he has all the different percentages of stocks above different levels that you've anchored from. Yeah. And I want to know why we chose June 16th, August 16th, December 28th, and what we're trying to accomplish here.
Yeah, so this was just looking at significant turning points for the S&P. And so how did the individual stocks react to these levels as well? So we saw back kind of the low back in December and see how many stocks are still trading above that level. If we were to break below it, I want to know, are we seeing a lot of other stocks breaking below their December lows? So we can see that since the start of the new year, we've seen actually more stocks actually unable to hold that December level, while the S&P is rising back to its August high. How many stocks are doing the same? 37%. Compare that to earlier in the year, we actually had over half the market was already above that August level. So it's just kind of using these anchor points, these kind of significant turning points in the market, and seeing how many stocks are above those levels as well.
Yeah, I love this. So you're looking
and then taking it one step further, you probably want to be erring on owning the ones that are doing that versus the ones that aren't. Do I have that right?
Right. I think that's two different conversations when you're looking for opportunities versus looking at the health of the market. I think those are two different topics. But you're right. Yeah, you want to look at the ones that are, but if you're trying to evaluate the health of the market, this is saying that it's really your list to pick from is a little bit smaller than what would be ideal.
Or if you're betting on that rotation, then.
Or if you're betting on that rotation, right.
So there's a lot of different ways to skin this cat.
Yeah, it depends on what conversation you're having. Are you looking for idea generation? Those are the lists you want to look at. If you're looking for kind of what's the overall health of the market, probably not great.
So we've been anchoring to the August highs and running a similar indicator internally. We see this. It's concerning about the S&P 500. When you run it on the NASDAQ 100, though, it's actually making new highs and continuing the breakout there. So
and when that's not, then we can look at the S&P 50. And when that's not, we can look at the top 10. And you can continue to kind of narrow the market down until you get the one that you like the most.
Listen, and the NASDAQ, to be fair, is the only one that looks that good. Even if I run it on large cap tech, you're not getting new highs, you're not getting confirmation there. But when we talk about breadth these days, it's kind of like breadth where? Because in the NASDAQ 100 continues to be great. You got the equal weight NASDAQ breaking out, but most breadth indicators look like this beneath the surface, which is just some
Andrew. And then what about, let's flip this on its head, and what about just the lack of downside, right? I remember last summer, I talked to Strazza every day, lucky me. And I remember every day being like, bro, stocks are not going down. Bro, stocks, this is like June, July, right into August. Like stocks stopped going down. You know, that mid-June. I mean, I could say, you could start saying a lot of stocks started bottoming out in Q2, not just June, in May, and some even in April. But that mid-June spike in the new 52-week lows list, and then from there, things just got progressively better. You know, when you think about market breadth, I feel like a lot of people are thinking participation, new highs list, you know, above certain levels. What about the fact that, you know, before stocks can start to go up, they need to stop going down? And that happened last summer. How much do you think about that?
Yeah, I think it's first you have to have, I think, in the kind of the rotation of breadth, and you can look at, I think the picture perfect it should be in textbooks is 2021, to where we started seeing the market, the breadth started to narrow in the summer. We started seeing less and less participation kind of in the fourth quarter. And it was really frustrating because that type of environment lasted for like 4 or 5 months. And technicians were kind of pulling their hair out saying there's no participation in this market because stocks stopped going up. Then we started seeing stocks accelerate to the downside January, February, where you did see that the stocks were really plummeting in that rotation. They not only weren't going up, now they're going down. So the first step is, are stocks going higher? A lot of them aren't right now. Are they not going down? Not yet. That would be the next bearish checkbox on their list of bearishness, but we're not there yet, but they're not going up either. The average stock is pretty much down on the year.
Most new 52-week highs in the NASDAQ since early February, 4 months.
But it's funny that you always look at the NASDAQ. But I think so what would you have to look at for the S&P?
I don't always look at the NASDAQ. I look at all the indexes. You know that I look at all the indexes.
No, but I think the only bullish thesis can only be looked at from the NASDAQ. You can't say the S&P 15, 4, 6, 5. You now are starting to see some international markets are starting to roll over relative to the S&P.
First of all, the S&P 500 is a nose hair away from a new 52-week high, number one. Number two, the Dow, people are talking about, the Dow's struggling and da-da-da. The Dow is way closer to new all-time highs than the NASDAQ. The NASDAQ's 15, 16% from new highs. The Dow's only 7% from a new all-time high. So you can't say only looking at the NASDAQ gives you the bullish thesis.
I meant from a breadth standpoint.
Well,
Steve's nodding his head. He's like, I listen to this every day with JC.
I consider this sector rotation as part of market breadth, right? And what happened off the June lows last year? All of those value areas like the Dow Jones Industrial Average, even the S&P to a certain extent, they were the leaders off the lows in June. And it was really only the NASDAQ and the growth stocks that were not participating.
Hugely bullish. You saw it in 2009. The worst performing stocks in the 2009 lows were the leaders for the next 6 months. That sector rotation was extremely bullish and very much fit the paradigm of what you're looking for with kind of that firming up.
Hold on. So you're saying that the fact that we got the sector rotation coming into the new year into the only areas that were not working last year is bullish. And I would venture to say you'd probably agree that if Friday was the beginning of the rotation back into those cyclicals and industrials and small caps and sort of out of, only 6 names, yeah. I imagine that you think that would be bullish too, right?
Yeah, I think chapter 1 was complete. You had that rotation from the sectors. Now what have you done for me lately? If you look at 2009, you had that rotation, but then you saw a broadening out where the whole market started going higher. We haven't seen that yet. We had chapter 1. We're waiting on chapter 2. Maybe we'll get it. Maybe we won't. But that's what we need to see next.
I think you both agree with what both of you are saying, right?
Yeah.
Breadth is not great. It's also not the end of the world. In fact, as bad as breadth has been this year, there's something for everybody in this market. If you're a stock picker, been plenty of opportunities. A lot of stuff's working in tech and growth. If you're an index investor, that's great for you too, because you can't do much better than the indexes these days, considering the stocks that are working and driving the market. And now we're kind of at this place where the Dow stocks and value kicked it off last year. Growth took the baton. And now it's like, if we get that sector rotation, if value, small caps, everything that's not working does pick up the slack here, you will start to get that breadth expansion and everything's probably fine. If we don't, we have levels in the Russell 2000 financials that'll probably break pretty soon. And we'll know that it's time to be a lot more cautious.
Yeah, I'm with you.
before we let Thrasher go, you asked me the other day about Sauternes, the late harvest Semillon from the south of Bordeaux.
Yeah.
Come on, man. This is the classic pairing for key lime pie.
You know what's funny about that? The next day, Wine Folly put out a whole video on that exact bottle. I don't know if you saw that.
Chateau de Chem, Thomas Jefferson, George Washington, they used to drink this stuff back in the day. You know, if it's good enough for Thomas Jefferson, it's good enough for me, is what I always say.
I'm with you. It was okay. It just wasn't my favorite. Not a big dessert wine. Not a big dessert wine guy.
What do you drink with dessert? What are you gonna drink with a key lime pie?
I thought you drink the Tokai. Even I know that.
I don't like that overly
You're good.
sweet.
If you got either one of those, you're good, Strazza. You're good.
Yeah, I'm just not a big dessert. Like ice
This is
wine.
first world problems at its finest. Chateau de Chem or Tokai?
Oh, you guys are great. I appreciate you guys having me on today.
Yeah, man, for sure. Thank you for coming by.
Thanks, Andrew. We'll do it again.
Bring him in soon. When we get breath expansion, bring him back.
Yeah.
I think we lost our host today. I don't know if Spencer's even here.
No, I'm here. It's a struggle for me. I appreciate you guys running with that.
Listen, as long as the good-looking guys are able to be on video, you know, that's what matters, right? Strazza, you got to give the people what they want. The people want more Strazza, is what I heard.
You got to fix whatever's going on here with your computer.
Well, you look good.
I'm going to Best Buy today. Is all I can say. I have an appointment with the Geek Squad.
As soon as we get off.
Yeah.
Kimmy coming by today?
Kimmy had to run. Dude, it's 9:27, man. Kimmy had to run. Kimmy had to go to her room.
Oh. All right.
Yeah,
Well, we're getting the trades here on the Slack, so I'll be watching. I'm curious. I'm curious to see. I think she's looking to put on trades. If I know Kimmy, and I haven't read her morning note, but I'm pulling it up as we speak. I think she's going to be pressing this, and I'm going to be in there with her.
I just wanted to say before I forget, speaking of Strazza did a very nice job on Friday with our very first edition of the Lunch and Learn new Friday show where, you know, it's Friday afternoon, get some lunch, hop on a stream, and talk about something. And Strazza, you did a good thing on how to find the right stocks to buy now. I'll drop the link in the chat, and I thought it was very good.
No, and it was a lot of fun. We'll definitely do more of those. Get JC on next week or maybe the following week.
What are we doing? What is JC doing a Lunch and Learn about? What should I do? Anybody want to chime in on the chat? What should I talk about on the old Lunch and Learn?
I think you should do momentum or intermarket. Go back to your roots.
Thanksgiving wine pairings.
You got to wait for Thanksgiving. That's not relevant.
In a few months, sure.
Got it. So not in the summer. By the way, fun fact about JC and his family: we have 2 Thanksgivings. Thanksgiving is my favorite holiday, so we have Thanksgiving in the spring generally, and we do turkey, the sides, French Burgundy, the whole thing. We go full out Thanksgiving in the spring, early summer.
What?
Yeah, that's what I do.
Is it like a thing? Explain it.
It's not a Cuban thing at all. In fact, Cubans came from Cuba, and it was just hilarious. They didn't know anything about Thanksgiving because Cubans don't celebrate that, and they're like, "Oh shit! All right, we eat turkey on this day." They call it sangimi. That's what the Cubans. Sangimi.
So wait, do I have this right? You simply do this because you love Thanksgiving so much, you just can't wait. You need it twice a year.
Yeah. So first of all, I love the food and the wine pairing, and I'm also a very thankful person. I'm grateful for everything that I have. I have a beautiful, healthy family. I myself am very healthy. Great friends that I get to spend a lot of time with. So I have a lot to be grateful for. So I need 2 Thanksgivings.
It is JC's favorite holiday, if no one knows.
Yes.
Do you have July 4th in Cuba?
Definitely not. No. Definitely not.
You just go from the 3rd to the 5th. That's a weird calendar you got there. All right. Let's do Hot Corner. All right.
Do it.
Come on. That was like the daddest joke of all time. I can't believe you fell for that.
Are you pregnant, Spencer? Are you?
Hot Corner. So hot right now.
All right. Talk to me, Strazza. What do we got?
All right. Throw it up. Somebody throw the list up. We got the list up. There we are. So Lowe's Corporation, not to be confused with Lowe's, like your Lowe's, JC.
My Lowe's, because I go to Lowe's so often.
Aren't you a Lowe's guy, not a Home Depot guy? I thought you told me that. Wasn't that you?
I'm a Lowe's guy because I went to Lowe's a couple of times. I don't think we have a Home Depot near me.
Okay. But you don't do any of that anyway. So why are we pretending, right?
Yeah. I have tools and they just sit there.
I have tools. I just don't know how to use them. I'm the same way. It's fine. So this is a different Lowe's, property and casualty, ticker symbol L. And look, like I think this is a good lesson. So that's why I wanted to spotlight this one today. 18 million is a lot of money. You know, when a CEO or CFO comes out and puts down $1 million or $2 million in his stock open market, that's a big deal. It really stands out to us. In fact, we had one last week. I think Match.com. Yeah, Match.com. CEO came out. I think it was like $1 million. It was a big purchase. It moved a large stock, right? This is, what was it, 16 or 18? So I had to say, who is this guy? And his name is something Tish. Hold on. I forgot the first name now. But I just looked him up. And his dad is basically the CEO. So he's got a lot of money, right? So you have to consider these things when you look at
Tish.
Ben Tish. Yeah. So the Tish family owns and operates Lowe's. And, you know, it's all their family in the front office. His dad's the CEO. So I'm like, how is the senior vice president of corporate development buying 18 million worth of stock? He's a large shareholder. His whole family is. So look, the stock looks good. Probably don't want to weigh it too much as you would maybe an executive or a CFO. He's simply buying shares in the family business. But look, if you like this one from a structural standpoint, beautiful base breakout above those pre-financial crisis highs, 53.50. They're trading a couple dollars higher than that today, but with upside towards 76. Not a bad risk reward, right?
How about this hedge fund, Senvest Management, filing a 13G, which is interesting. It's a 13G in such a shitty company. This thing's making new lows. This thing's got absolutely crushed. This is Skin, beauty health company, Skin. How much? 5% of the company, 5.1%.
No, can't touch this thing, right? Look at the chart.
Here, Fonz, throw it up. It's slide 1. Throw that up for the folks to see what a disaster this thing has been. Where do you start getting interested? Above 10?
No, I'll go buy like ELF or Ulta. Like there are stocks that actually look good in this space. I guess Ulta does not look good anymore. Wow.
What do you think this hedge fund's thinking here? You think they're just stupid, or you think they're onto something?
I think you're right. It's interesting that it's a G and not a D, right?
You would think that something that's gotten destroyed like this, a hedge fund's going to step in. They're going to be right. They're going to be activists. By the way, not everybody understands the difference between a 13D and a 13G. Strazza, can you just give us the elevator speech on what the difference is?
Yeah. So the reason we're saying this is 13G just means it's a passive investment, which means you literally can't have an opinion, right?
Like Warren Buffett, he files 13Gs.
Yeah, I mean, every once in a blue, I'm sure he's filed his share of Ds, but the whole thing for Buffett is he's investing in teams and management teams that he believes in. So there's no reason for him to, get involved. So typically you'll see an activist come in with a stock that's really struggling and a stock chart that looks like this Skin stock chart and try to, impact some sort of change for the better and generate some sort of shareholder value that way, make money off of his investment. But in this case, he's filing a 13G. Oh no, JC, you read it wrong. It's a D. So this whole point is moot. It is a 13D. So you must have looked at the one right below it. It's a 13D in the beauty health company.
Oh, it's listed on this morning's note as a 13G.
Oop, my mistake. Yep.
Now that makes a lot more sense.
Yeah, activists. It's Temper Sealy that there was a 13G filed for, the one right below it.
Got it. That makes a lot more sense that this is a 13D, because you look at something like this, it's like, what are these people doing?
Yeah.
They're going to invest. If anything, the management's proven that they don't know what they're doing.
Yes.
So, right? So this makes a lot more sense as a 13D.
Not so strange after all. This is exactly what we would expect.
Yep.
So big list today, though. And, the lists have been getting bigger. We talked about that. Everybody's allowed to transact again with the earnings blackouts passed.
And list of financials, right? You got a couple of banks in there. People are stepping in. Key Corp, right?
It's cooled off. Like for a few weeks there, it was like 5 to 10 regional banks on every day's list. And they're still trickling in, but we're not seeing as much of it. Maybe that's a good thing. Maybe it's a bad thing. I don't know. Right.
All right. We got
stepping in
from McLaughlin here.
They're trying to quell investors amid all the bad news. The bad news has gone away, but they've also stopped buying. So
we're bringing in Shawnee. Can we throw up the chart report?
Yeah, you're right. We didn't do that. You want to
chart
report real
report?
fast?
I want to show Ian McMillan's chart. I like that.
All right, let's do chart report right now. I don't even know. Forget it. I'm not running the bumper. It's too hard. Let me just bring up my the action of running a bumper would might kill me today. Let's
Nobody
find the
wants you to
chart. But
die.
here it is.
So I really like
No.
this chart. This one coming from our friend Ian McMillan, showing small caps and micro caps, sort of putting in this little base here, right? And when you talk about there's only 7 stocks, you scroll all the way down to the bottom. It's in the top 10.
Right.
When you talk about only 5 stocks or 7 stocks that are participating, this chart is really front and center. In my opinion, is the underperformance out of small caps. It's really some of these mega cap names that have really been dominating the year. But look at these little basing patterns and making new multi-month highs in small caps and in micro caps. So very, very impressed by that. And I just wanted to show the chart from Nautilus as well, the VIX, showing the regime. This is what I was trying to talk to Thrasher about. How in bull markets, as you can see in the S&P 500, when things are doing well, look at that volatility regime and look how low the VIX goes. So with the VIX making new multi-year highs, new 3-year highs for the VIX on Friday, the question is, are we entering that sort of regime that we've seen in the past? Thrasher said potentially, but there's not enough evidence to suggest that. Quite the opposite. Might see one more mean reversion, hit 20, and then roll over. Yep. I'll buy that. But this chart by Nautilus Research, a great chart, really shows exactly what I was referencing. Right? You feel me on that, Strazza?
Yeah, I mean, listen, what Thrasher's not saying, what Thrasher's saying isn't crazy. Volatility does mean revert. I think what you're saying is after it mean reverts, does it plunge lower again and kind of build out or establish a new range that would be more characteristic of a bull market environment like the ones we've seen in the past? Yeah, listen, I think you got to be open to both possibilities. I wanted to ask him about the trend lines that I have drawn on my VIX charts, because if you draw a trend line from the lows from a few years ago, you did just get a break there. But I know that that's a topic that's hotly debated, whether or not we should be drawing trend lines on these things. So.
Yeah, I don't like the diagonal trend lines. I think, listen, I'll defer to Thrasher as to more of a VIX expert than me, no question. But we'll bring in Sean now in a minute. I know Sean and I both look at those volatility regimes. I remember after COVID, Sean being like, as soon as the volatility index breaks below 20, we know the crisis is over. We know this COVID stuff is over. And he kept saying that again and again and again. And I didn't disagree, and he was right.
Sean probably pays more attention to the volatility index than me or most of the analysts.
He pretends he doesn't. He's like, oh, I don't know anything about the VIX. Oh, I don't know. I feel like he's like sneaky, like DL volatility index watcher.
And debt ceiling.
Let's find out.
Definitely not the debt ceiling. Johnny baby,
what's happening, boys? Good morning. Happy Monday.
Looking good. Happy Monday. Way to blow it yesterday, those Nuggets, huh? Did you watch it?
Talk about it? Can we talk about it, or do we have to wait for recess?
I did watch it.
Can't do nothing about that zone defense, huh? They don't even know what to do. Spoelstra's got their heads spinning.
I mean, what's your take, Sean?
My take is that that was a great game. A lot of swings back and forth. I thought Miami was going to blow it when Denver went on that like 25-3 run in the second quarter. I thought that was it, but they battled back. And look, I'm happy. I want it to be a series. This is good. I want it to go 7 games because I want to argue with you guys about this for the next 2 weeks.
I just got to.
Sean and I never get to talk NBA hoops because he just ignores me whenever I bring up NBA hoops. So it's quite the treat, Sean, to argue with you about something other than football.
And he's right too, though. Like that game was just so good. If he could keep playing like that, it's going to be a great series.
Who was that white guy off the bench from Miami? Great game.
Duncan Robinson.
Who was that white guy off the bench from Miami? That's not racist at all,
dude. How
white people?
Strus did it in the first quarter, and then Duncan came in and did it in the fourth.
Duncan, yeah. Great, man. He was a powerhouse off the bench. Great game out of that
Duncan
guy.
Robinson taking it to the hoop, getting layups. What is this? What is going on?
They seem to have like a tremendous ability to just hang around, right? Like they just stay in the game long enough and they stay competitive enough that they can go on a run or they can make a play in a moment where it can make a difference, right? Like you can't put put them out, it seems.
You know, they needed to win that game, because if they didn't win that game, then they basically would have been losers of 4 of their last 5 games. That is not a good look.
Oh my God, they beat the Celtics 5 times out of 7. Stop it. All right. Anyway, Miami did win. So it's tied 1-1. Miami's got home court and going back home, and I'll see you on Wednesday. Let's talk about what we're doing here. We had the great pleasure of having our friend Andrew Thrasher, multi-winner of the Dow Award over the years, focusing specifically on volatility. You know, from an execution standpoint, Sean, you and I have found ourselves over the last few weeks betting on that rotation back into those cyclicals. We put on a risk reversal in the small caps. We bought way out of the money calls. It's less out of the money now, but at the time, way out of the money calls and Caterpillar. And the reason that we were doing that Caterpillar trade was because volatility was so depressed. You know, you could just go out as far as possible, you know, being long the calls. Why don't we talk about sort of that thought process? VIX hitting new 3-year lows. Volatility's cheap. As a trader, as an investor, how are you approaching the market with that in mind?
Well, look, I always pay attention to what the VIX is doing, just as a general, barometer of what the market is pricing in for risk. And when VIX is low, typically you'll find that implied volatility in individual names will also be very low. And when that's the situation, when that's the environment we're in, I like to keep things simple. I want to create my own luck, right? I want to put myself in position for the trends to play out, for a possible volatility expansion to work in my favor. And speaking of creating our own luck, I mean, you guys were talking about Palo Alto a little earlier today. I don't know if you know this, guys, because this happened on Friday, and you guys take it easy on Friday afternoons. But our options trade on Friday, we snuck into Palo Alto. Now, look, I had no idea Palo Alto was about to be added to the S&P 500. I don't think anybody knew. I was getting some props in our internal chat with our customers about, hey, great call on Palo Alto. Look, I had no idea, right? But when you are creating your own luck by positioning yourself in strategies that will benefit from perhaps a mean reversion volatility and taking advantage of cheap volatility to get long, good things happen. And, in an environment like this, we just have to, it doesn't make sense to sell premium, right? Like, you don't want to be on the wrong side of premium. JC and I were talking last week about some trades, and he was wanting to, sell some puts. I'm like, we could, but we're not really getting paid for it, and it's more risk than it's worth. We want to just keep it simple in an environment like this.
I think you make a good point, Sean, right? Like, good things happen to stocks that are going up too, right? Like it's not really a coincidence that Palo Alto was added to the S&P 500. It's not going to be a stock that's in a long-term downtrend, because in order to be added, your market cap has to be increasing, so your price has to be going up. So it's not that we were like shocked by it, but had nothing to do with why we put that trade.
I think what they're saying is that the market is a discounting mechanism, and good news tends to come in the direction of the underlying trend. And the fact that Palo Alto has already been in an uptrend, showing relative strength, making new highs, and now all of a sudden good news comes out that they're being added to the index. Like, did we know that was going to happen? No. It would have been illegal for us to know, for the record. So we did not know that it was going to happen. But are any of us surprised at all?
No, because it's really like one of the main fundamentals or pillars of our strategy, but we almost forget sometimes. Like, of course, good news tends to happen to the stocks that we're buying, because we're buying good stocks, and that's part of the reason why we do it. We're buying stocks.
And I'm glad we're talking about this, because this doesn't get talked about a whole lot when it comes to VIX and volatility. When volatility is low like it is right now, you tend to not see too many surprises. So let's say Palo Alto, the trend had been up, right? If there was going to be any major move that surprised people, it's going to surprise people in the direction of the underlying trend, generally when volatility is low. When volatility is high, that's when you have to be on high alert for surprises that you weren't expecting, right? For reversals of trend, for extreme choppiness. But when volatility is low, that's also a signal that, hey, you could trust some of these trends. There's some oomph behind them, and they're probably going to continue.
I like it, Sean. Did you hear who Palo Alto is replacing, by the way, guys? Because we always have fun with this, so probably worth mentioning.
Who Palo Alto is replacing? Let me think. Is it?
I said it earlier.
Is it a financial?
No, it's in exactly what sector you would expect it to be in. These all these stocks go down. It's a telecom.
Oh yeah, telecom. Who's it replacing?
Dish Network.
Dish Network. That's right. Spencer did say it. Good call.
Oh, Dish. I mean, this isn't a Dish thing, but it just reminds me of satellite. With YouTube TV now offering NFL Sunday Ticket, is anyone going to buy DirecTV anymore?
No.
They've got no business model.
None.
And they're doing a great job advertising it and letting everyone know. I might even get in on that, whatever this discounted offer is that they were.
By the way, the YouTube TV is excellent. I get the NBA package through YouTube TV. I've had it for years. Amazing. You could set who your favorite team is. It automatically records it. You could choose which telecast you want, whether you want the Heat telecast or whatever, or whoever they're playing against. So you set it. I let it run, so you can either start live and just watch it live, or start from the beginning. Excellent, very user friendly. And
YouTube TV is a game changer for sports fans. And I'll take it one step further. Like on college football Saturdays, JC, it's the absolute best. I just set it to record college football, and it records every game. I don't miss any game on college football Saturdays. It's the best.
Just skip the Gators game. Skip that one. You don't want to watch that.
Let me just. I agree with you guys so much. Their algo is so much better than anyone else's. Like, I'm always complaining about, like, Netflix does not know what I like. It's a disaster. They're always like showing me like what's trending. Nothing I'm interested in. YouTube TV, I turn the thing on. They know exactly what I want to watch. I forgot that there was some weird lacrosse game on in North Carolina. It's right there in front of me. They got the golf right there. It's really good. They know exactly what I want to watch. So I hang out.
YouTube TV is going to kill cable TV for good.
Yeah, I mean, Sunday Ticket is huge.
Yeah, it's a big one. It's a big one because they had it was like a 20-year deal or 15-year deal. It was like a long-term deal. It just expired.
Yeah.
So DirecTV sold to AT&T. Be like, we're out. See ya.
Yeah. HBO just redid their streaming thing too. Have you guys checked out the new? It's called Max.
I know. This is very confusing.
It's not different. It was a rebrand. There's nothing new about it.
It added a ton of other shows that are not HBO shows. Traditionally,
I've been catching up on the last few seasons of South Park. I was way behind, but that's on HBO now.
They have every season of South Park. It's pretty good.
So last options question, Sean. We're in a regime where volatility continues to decline. Like I said, 3-year lows coming into the week. Right, we had that ripper into the end of the week. A lot of new 52-week highs. Starting to see some of that rotation back into the cyclicals. Volatility is very depressed. As an options trader, forget the positions that we already have on because we already have plans for those. How are you approaching this week? What's on your mind?
Well, I kind of mentioned it earlier, but like right now, I am keeping things simple. I mean, look, options traders like to talk about sexy strategies and multi-leg spreads and dispersion trades and all these crazy, highfalutin terms. That's great. But in an environment like this, you're getting paid to keep it simple. And you guys know I'm a simpleton. I like to keep things as simple as possible. It's so much easier. And when things are simple, you can make more money overall, I feel like, because when things are simple, you're less likely to make mistakes. You're less likely to have execution error. So JC, every trade that I'm looking at this week will probably be some version of a long call trade or maybe a call vertical spread, but not looking to get fancy here. Keeping it simple is what's paying in this type of market.
Yep, that's great advice.
S&P 500, highest weekly close in over a year. Highest weekly close, check my math, highest weekly close since April of 22, 14-month highs for the S&P 500. So it might not be doing it on a daily close, but on a weekly close and on a monthly close, new 52-week highs.
All right, cool your jets. Let's talk about the tape real quick. Spencer's broken today, so we can't run the bumper. I'm just going to jump right into it. We'll spend a minute here. So we've talked a lot about small caps today. You highlighted a really nice chart by Ian McMillan on the chart report. Small cap Russell 2000 index was 3.63% Friday. It was its best day since November. And it would have been one of the best days of last year too, right? So you got to go back a while to see performance like this from small caps. So likewise, what I'm looking for today, when I'm looking at just early sector performance, we're only 20 minutes into the session. I want to see like that continued bid in small caps. I want to see follow through there. It's also kind of the same theme as like cyclicals. So small caps are industrial and financial heavy. If you look at XLI or XLF, really strong finish to last week, both Thursday and Friday. Nice up day. So I want to see those more cyclical groups working today, showing that follow through. Not quite getting it. So energy is leading the way, looks good, but that's very much news driven. When you look at other value or cyclical groups, materials, industrials, financials, rounding out the bottom in terms of sectors that are lower today. But the interesting development here is I also mentioned speculative tech, right? And you asked me earlier in the show about why I'm watching that. It's because we want to see investors move out on the risk spectrum, even in the groups that are working. So in technology, we do want to see rotation into riskier, smaller stocks, more speculative tech and growth stocks. ARK's a good way to measure that. And ARK was up just a minute or two ago. Started doing the segment. Now it's turning lower. But you really want to see follow through from all of those groups that I just mentioned today. That's almost.
Well, it's good to see the catch up in the Russell.
And you're getting rates up a little bit again today, bonds down, which to me suggests that rotation into cyclicals, that fits within that theme of rotation.
And look, you know what that move higher in rates doesn't fit with? Apple continuing to scream to new all-time highs. So a lot of people were complaining, maybe not a lot of people, but some people were complaining about, it's a new weekly high, but it's not an intraday high. It's not a real new high for Apple. I'm sorry. Okay, if that was the case, you got it right now. So,
what did Charlie Dow teach us, Strazza? The closing prices are the most important prices. So you can ignore our good old friend Charlie if you want. I will not.
Just telling you some crazy things I heard on the internet this weekend.
You got to be careful with what you read on the internet.
You heard something crazy on the internet? I don't believe it.
I watched that 60 Minutes episode, and apparently, the internet depresses people and says all sorts of these crazy things. I don't know if you saw 60 Minutes last night, but
I think people just like to depress themselves and use the internet as the excuse.
Can I just say, every 60 Minutes episode or news story I see, they're just bashing Facebook and Meta and Instagram about how they're killing all of our teenage girls and all this stuff. And I know it's terrible, but the stock price continues to scream higher after every one of these big negative.
Yeah. It's the app's fault, not the parents, right? Are you kidding me?
Listen, come on. You can't even get into it. I don't have a family. I don't have children like you like to remind me. So I have nothing
for the record. I like to remind you that you don't have children so that you take advantage of the fact that you don't have children. So go to happy hour, play your golf, do what you do.
One of those
do what people with all that time on your hands do.
One of those advantages is that I don't really have to care, or definitely don't have to opine on this whole 60 Minutes Meta Instagram issue. It's not for me.
Strazza is going to live like that Dave Letterman lifestyle and have his first child when he's 61.
Bad parents blaming apps instead of themselves. Can we do some resets? I got a good one.
Yeah, please. I thought we were already doing it.
Are we bumping? Are we doing a little recess bump? All right, throw the chart up. Slide 1. I thought this was interesting because as a restaurant goer, someone who likes to go to restaurants and order nice wine and things like that, I've noticed that the service, outside of New York City has been back for a long time, but sort of outside of New York City has kind of been a little bit of a disaster in a lot of places. Everybody quitting their jobs, hard for restaurants to find workers. This chart was sent to me by our good friend Barry Ritholtz over the weekend, showing the quit rate declining. So fewer and fewer people quitting their jobs. Sounds to me like more and more people going back to work. You're getting a lot of these companies, I think Meta just announced like 3-day work weeks or something like that. You're getting more and more of this. I'm all for it. I like the fact that people are going to work. This quit, right? The great what do they call it? The great
it's been a thing. Listen, it's been a weird labor market since COVID. I don't think Spencer's here to kick us off about how we talk about this particular topic. I don't think he loves it though.
I am here, and I will end it eventually.
JC's talking about the quality of service, and that obviously goes down when employees are very much in the driver's seat when the unemployment rate is at record lows. Finally seeing it start to tick back higher. find some normalcy, right, that's going to change. Oh well, it's a cycle. It's been falling.
I'm glad to see the quit boom coming off. I'm glad to see this quit boom coming off. I was worried about Strazza. I thought he was going to quit the morning show.
Never.
Are you kidding me? Strazza's like
Sean,
the third most important person on the morning show. We need him.
Sean, if I had my soundboard working, I'd give you a badooch, but I don't.
The Great Resignation. That's it, Nathan. Thanks, Nathan. That's what I was looking for. The Great Resignation. I don't like the Great Resignation. I want my duck, and I want it on time with my Pinot Noir.
Employees have had all the leverage. Is really what it is.
I joined it last year. It was great, best summer of my life. So
did you quiet quit?
No.
Did you quiet quit?
Explain to people what quiet quitting is, because quiet quitting is fucked up. Quiet quitting.
Quiet quitting is it's quitting your job without quitting your job. It's just, gradually doing less and less and less work while still working.
But you got to be a shitty employer to notice that people are just not doing their work and just keep paying them.
It's not true. You just have to be a big employer. Like, we don't have a lot of these problems that we hear about, whether it's quiet quitting or working from home issues. That's mostly for big companies, corporations, where people get lost in the mix. Nobody knows what anybody's doing. We don't have that here. Everybody's talking all day. So we're always like, oh, work from home is great. For us, it totally works for our model. Professional service, work from home, like it's a service business that we're doing. It might not work for, Bank of America, where they are used to having 500 people in cubicles, their whole back office, and everybody's talking to each other all day. It's just different. So yeah, I think we're lucky in a number of ways. It's for nimble companies.
All right. What else you got for recess? Anything
I got
good?
one more. I got a question for the audience. Anybody? Wednesday night, Spencer and I have a mandate where we will be watching Game 3 of the NBA Finals, and we'll be in Baltimore. We're in Fells Point. There's probably a place right there in Fells Point that we can go to, but if somebody has a much better idea,
here, you know what?
Crabs. You want to get some crabs?
We should try Mother's. Mother's is an old favorite of mine.
Mother's.
I don't know. Yeah.
We should sneak out on Wednesday and get some crabs.
I had a great time in Fells Point this past October.
It's in Fed Hill.
The Buffalo Bills play the Ravens. There's a great Bills bar in Fells Point. I could point you in that direction if you'd like.
Yeah, I'm definitely not going there. Great Bills bar. What an oxymoron.
Sean, anything for recess? Anything good for from your weekend or what?
I'm just glad for Strazza and JC's sake that the Heat finally showed up for a game. It's been a while. It's been like 2 weeks since the Heat have played a good game. So glad to see them back.
Are we watching the same playoffs here? Are we watching the same playoffs? The Heat have been underdogs every single game. They crushed
I've watched
the number
them
one
lose
team
4 of their previous 5 games. Yeah, I've seen what's going on.
I will say, Sean, fine. Let me give Sean something. The Nuggets look ridiculously good. I mean, and that's why I think, the Heat are going to be tough, because I don't know how they won that game last night. I don't even know how they hung in.
Nuggets look great, except when Miami's playing zone defense. They don't know what to do with themselves.
I mean, both teams played great last night. That was fun.
And by the way, Miami's second leading scorer hasn't even played yet. So he's coming back on Wednesday. Tyler Hero.
I don't even know if that's a good idea at this point. Like, doesn't that kind of mess with the mix? Can we talk about that?
All right. Well, look, I'm hoping we get to a game.
Yeah, like
7,
if we brought Google back into the S&P 500, it'd be a bad thing. Come on.
Let me say something about basketball that's interesting. Have you guys heard all the stats that are getting thrown around about like the last time these teams played, or the last time the Nuggets were in the finals or something? There were like no 3-point shots back in like the early finals games 30, 40, 50 years ago. And now there's tons of 3-point shots.
Yeah, the NBA's changed because they figured out the math.
By the way, the Nuggets have never been in the finals. This is the first time.
So something like that. So I was hearing something about how they never used to shoot 3-pointers. It's like, was it that the facts changed? Did people get better at shooting 3-pointers? Like, did they just figure out that was a better strategy?
It's both. They did the math that a missed 3 was more efficient than a made 2.
Right.
Oh, they did the math, and then players got better accordingly. It was a combination. Right, Spencer? Spencer was a big oops guy, right? Spencer was basically like that. It was a chicken or the egg.
I understand that they did the math and figured it out, but then did the players get better to fit that math and make it so that it made sense more? Because
yes, and they started giving the players that play worse defense but are better shooters more playing time. Guys like Duncan Robinson, for example,
There
30
was-
years ago would never be the NBA.
There was an incentive to be a better three-point shooter along the way, so that's part of what changed it.
Yeah, and playing your three-point shooters more despite their inefficiencies in other parts of the game.
It's the money ball of basketball.
It's
So-
the money ball of basketball. That's right.
We got new information, so the game evolved. Then the players evolved to fit the new game and the new strategy. I just think it's really cool.
Like football, they didn't used to throw the ball as much as they do now, right? They
There
didn't even
was
have
also-
forward passes.
A lot of change in rules for football that drove that. And was that the same thing in the NBA? Because it used to be a lot harder to go
Yeah,
to.
yes.
They didn't have an
Strazza-
NBA. They didn't have a three-point line back in the day.
Strazza's right. Strazza's right. They made it more difficult, basically for defense, and they have to like lag back a little bit. It gives you more space between you and your defender to shoot a three over them, because it's just harder now. You can't hand check. You can't ride their chest as much.
Takes a foul.
One question, final question before we close the show. I don't want to hear everybody's answer. How long before the 4-point line gets introduced? Go.
It's
They're
coming.
from it.
Yeah.
How long? How many years? How many years? Go.
I hope never.
5?
Never.
I think
Never.
10. I think it's going to be over 10 years, but it's coming.
Hopefully never. Sounds terrible.
All right, but before we go, I just want to shout out Aiden Hill, the goalie for the Vegas Golden Knights, with the greatest save I've ever seen in my life in Game 1 of the Stanley Cup Finals. If you didn't see that save, check it out. It was unfreaking believable.
Are they playing
Um,
tonight?
Googling it
Saved
now.
the game. Yeah. They're playing tonight. Game 2 is tonight, I believe. All right, that'll be a wrap for us here. Thanks to Sean McLaughlin from All Star Options. He's with us now. Thanks to you guys for watching. And Andrew Thrasher was our featured guest today. Thank you to him for joining us here on the morning show. If you missed anything, we're always on YouTube. Just go to our channel, Stock Market TV. We're always here. We're doing more shows, doing new content every single day, new shows every single week. Links in the description to our free research, the Hot Corner, which we mentioned, the chart report, which we mentioned. Click on those links. They're in there right now. And smash that like button. We'd appreciate that. And I'm going to go to Best Buy, get some more RAM so I don't die on this show tomorrow, or at least my computer doesn't die tomorrow. And thanks for bearing with me today. Everyone have a great rest of your day. Good luck. Go make some money. We'll see you later.
Adios.
Everybody.
Play it.
Run it. I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah. Hit